And then after we're done with what's planned, we can probably go over some tickers as well. Okay, so in general, we had a BTC short before. We had this short open, and I closed this one at entry like only a few hours after we opened it, essentially. Um, and the reason is that this is like when you trade harmonics, this is a very important level because this is a very clean Gardley right over here. That's why this box, that's why this box is so small, because everything is so centered together. So that was a very strong rejection level. However, we got that initial tap, we took profits down here, we got back into it, and we reopened the trade, but we are not rejecting. How do we know we're not rejecting? That is, if we go back to the range chart, you can see that we actually closed a daily candle above the range. Like, this is the same range as... I'll let you have this chart for months now, right? I'll let you go over this chart every stream. This is the first daily candle that we have ever closed outside of this range now, which is in my eyes a very, very strong sign. So that's why the moment we close the daily up there, I just instantly close the short, because it's like, as long as we're trading above that range, I don't really want to be in any shorts. Because even though we are at range highs, right? Like, we are still at resistance technically right over here. I don't think it's gonna hold just because of how many shorts are open. Just because like so many people shorted these highs, and all of those people have like their stops break even or their stops still like up there somewhere, etc. That I think if we actually get like one more leg up, that leg is gonna be extremely violent, because we're just gonna get into liquidity and it is just gonna keep liquidating people. Because there's like 33 billion like liquidity worth of shorts up there. So I think the chance, now that we're this close and actually have momentum, I think the chance that we don't tap it is extremely small. Like, what happens after that, I don't know. It may cause such a big imbalance that we go back down and get a pullback first. It might also just send us straight on to all-time high. What happens after it? No clue. But in general, I don't see. I think it is very unlikely that we don't clear out the shorts on all of these highs here. Just because there's so much liquidity, and for the first time in a very long time, we actually have market structure on our side, right? So it would make sense to keep going up. So as for BTC, I think we look very, very good. If I go to USDT dominance, whoa, this is a very old chart. Wow. Okay, I'm gonna remove this. As if we look at USDT dominance, I'm just gonna draw a very simple support resistance zone, right? So we can take this. We can even take it on the wick over here if we want. Just gonna use this, draw a little line. There it is. Our current support and resistance zone, right? I don't usually use support resistance, but I think this shows my view on the market the best. So what you can see on this level is we flipped it to resistance, 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 tried to flip it to support, instantly failed, came back, support, support, and now we tried holding it at support, but we went back below it, and we're currently looking to retest it. And if you go on the lower time frame, you can see it more clearly that we just drop below it, then build back into it, and this is just a very textbook retest, right? Went back up, and we started rejecting again. So in general, I think this looks very good. The only thing I'm slightly worried about is the RSI. Since RSI is making very clear bullish divergences, so there is a good chance that we get one more pullback first. But in general, I think just accepting below this level, just like that, is a very good sign. So overall, I think the market is in for another leg up, and that's either gonna happen like on this push, or we're gonna get like a push down first. So for example, I don't actually know if there's a 5-0 here. Yeah, for example, we have a nice 5-0 over here. So like kind of worst case scenario on my eyes would it be if we start reclaiming this, then go back to the D point and then go down. That could happen for sure. But in general, just accepting below that level is a very good sign. Then for the other ticker that we want to look at, BTC dominance. BTC dominance is finally getting that rejection we talked about. It took a while, and we blasted through like nearly every resistance I initially drew up. But finally, like, we're starting to show a pullback. Now, we are finding support at this 141 butterfly already, which is not what you want to see, but it does give us room for a little Quasimodo pattern. Right over here. So we have our initial push up, our initial high, initial low, higher high, lower low. So this would be something like this. So we can expect a high somewhere in this region if this ends up being a low. So as for BTC dominance, I think we are in for a short pump here over here, but we did break the lows right over here, so it would also make sense to form in a lower high right in this region. Now, if we're actually going to do that, we'll see based on the reaction either on this support level or on this deep crab right over here. But I think the chart looks pretty bad. I mean, you can see it on the oscillators as well. Oscillators are just completely down the gutter. But same thing here, right? We entered like oversold area. I don't actually use the oversold areas. Like, I don't use them as areas. I only use divergences. So we could get a slight relief pump, but I think in general, breaking this low right over here is a very weak sign for BTC dominance. And then I think those were all the indicator tickers we wanted to go over. We have some new plays active. I wanted to share Mother, but I didn't take it either, so this is just very sad to see. But we got into Sushi, which is really nice because Sushi is just absolutely sending it. We're getting a slight pullback with TP already, right? Just sending like that is really nice. Floki still at entry, nothing happening here. And we go into Popcat. Popcat's doing really well too. So that's all. Those are all of the new plays. I gave them like literally this afternoon, so there's not really much to update. Popcat's just trying to flip daily open, but in general it looks really good. Okay, now as for the main topic of today's stream, I'm gonna open Velo and I'll change my screen share. Okay, let's see. Can you guys see this? I'm gonna have to change the same thing on my what's it called? My OBS as well. See it, yeah? Everything alright? Okay, so for volume data, I use Velo. I don't look at all of these things. I mean, you can use them if you like that kind of data. I personally don't. I use the charts on Velo. I'll post a link in chat as well. You don't even need to sign up. Like, I'm literally not signed up currently. This gives you access to like the full charting stuff, right? But in general, what I use it for is for the open interest data, because they have pretty good open interest and volume related data. So what I use is I don't actually use the volume thing right over here. For indicators, what we're going to turn on is, I'll do it one by one. So we just start with open interest. Now, what is open interest? Because you can just see, hey, this is just, it's just doing this, but it doesn't tell us anything about price. Open interest is the amount of leverage contracts that are opened. So that is both longs and shorts. If someone opens a long, it goes +1. If someone opens a short, it goes +1. Open interest is just the amount of contracts open. This doesn't tell you anything about direction. It just tells you how many people are leverage trading. Well, not necessarily how many people, like the volume in people leverage trading. So when open interest is going up, a lot of people are opening new leverage positions. When it's going down, people are closing leverage positions. That can be through either liquidations or through profit taking. So what we can read by that is we can use that in relationship to price to kind of guess what's going on, right? And I'm going to go over the other metrics after this to show you exactly what's going on. So in this case, price is going up. Right over here as well. I'll actually, let's see, what is the hotkey for this one? Alt V, okay. I'm going to use this one a lot. So starting from here, price is going up and leverage is going up. And somewhere over here, like leverage stops going up, right? Over here, both are going up. If both are going up, it is very easy to assume, hey, if people are opening new leverage positions and the price is going up, well, they are long. That makes quite a bit of sense, right? If we're opening new positions, the price going up, that probably just means people are going to go long. Now, what happens after that? If we know people are going long over in this area, and we see price going down, and open interest going down over here, we can use our previous knowledge of people opening new longs to see, hey, what's going on over here. We can just assume that, hey, because this price is going down and leverage is going down, people are taking profits. So that is one of the ways you can know, hey, this dump, that's a pretty healthy dump. That is literally just people taking profits. People are not actually aggressively selling. There's not like tons and tons of shorts being opened. There's just longs that had a bit of profit that they wanted to realize. Which makes sense because the markets do not move like this, right? The markets move like this. So open new longs, take profits. Open new longs, take profits, etc. This is very healthy price action, what you see right over here. That is one of the reasons also why I said, hey, I don't want to short anymore. Because even though we are that close to all-time high, like this is very healthy price action. We saw it on the entire move up. The entire move up had a lot of spot buys and had a lot of just leverage longs and taking profit, longs, taking profit, etc. Open interest as a standalone is pretty interesting. You can do quite a bit with it. But it is incomplete because we don't know exactly what is happening. So for example, in extreme cases, like, let's see, can I find an extreme case? Let's say over here, right? During the war dump, you can see exactly what happened. So this was a dump to 49k. You can see just like leverage was pretty high over here. And that dump just absolutely obliterated all of the open interest. This is how you can see, for example, longs being liquidated. Open interest is a very nice metric to tell you what is going on. Because this also tells you, hey, this is shorts taking profit, for example. Because, well, you can see open interest skyrocketing right over here. So that means that they will have to take profit someday. Well, they took some profit over here, but most of it was taken over here. It is a good metric. It is an incomplete metric. Now, how do we, well, complete the metric? We do that by adding two more things. I'm going to add these at the same time because they are very similar. And we'll go over those individually. So what we want to look for is we want to look for aggregated spot volume. And we want to look for aggregated volume. And these charts, well, you can see data, but I don't like them that much. So I just put them on cumulative data candles right over here. So cumulative data candles. Now, what does this tell us? What this tells us is, one, the total amount of volume. This is our entire volume, right? So leverage and spot together, like all of it, future, spot, everything, is the aggregated volume. Aggregated spot volume is literally only spot. So when you see things like this, when you see things like over here, aggregated spot volume is going kind of sideways, right? I mean, we started the little push over here, and we ended it over here as well. It actually went sideways over the entire thing. And at the same time, you see that the total volume, so spot and leverage, is going up. That is telling you, hey, so spot isn't really doing anything. But price is going up and total volume is going up. So because total volume is going up and spot is doing nothing, that means that leverage is buying, but spot is indecisive. So in this case, this push was leverage led. A lot of leverage plays were taken right over here. A lot of longs were taken. We already knew that because this was a very obvious example. This serves as confirmation in this case. So you also know, hey, those longs are going to have to take profits someday. A very important difference between spot and leverage is that we can assume that spot will hold for longer. So spot is not as eager to sell as leverage is. Longs usually sell pretty fast. So in this case, after one push up, leverage already sells a bit. You can also see that right over here, right? We got a nice push up, and then people started just taking profits. What do you use that for? We use that in extreme cases. This is a rather mild case. This is a rather simple case to analyze. But we can use this in a lot of scenarios. So let's go over here. Try and see if we can find an edge case. Yeah. So for example, over here. This was the drop. Yeah, this is exactly what we longed, okay. This was the drop to 52k. What you can see over here is we can see two things. I'm gonna minimize open interest for a bit because we're mostly looking at the other two. We know that price is going down. Now, if price is going down, what we want to know is who is selling. Because we know if spot is selling, that is a more long-term bias than leverage. If leverage is selling, then they will eventually take profit. But spot selling, well, they can wait for a long time. If spot is selling, they can just wait until like literally the 40s to get back in. But leverage sells have to take profit eventually. So we want to know who is selling. So what we look at is we take important marks. So for example, let's say the start of the dump, right? So I'm going to take the last green candle, and then I'm going to take the bottom of the dump. So in this dump, we want to know, okay, who is selling? So what we do is we grab a little measuring tool. I think I need to. Where's the actual measuring tool? I literally have it in my favorites bar on TradingView. I don't even know where I can find it. Yeah, this one. So we can do with that, right? I'm not going to do it for price, but this is how we're going to measure. We're going to measure from top to bottom. It doesn't matter which way you measure. You can do it bottom to top as well. It doesn't matter. Just do it consistently because you're going to get slightly different values. So for example, if I were to measure this, it's going to be 7.88. But if I measure it the other way around, it's 8.55. So just measure it consistently. So let's measure. We're going to measure spot volume first. So I'm going to take the top of that and I'm going to drag it down to the bottom of that. And we're going to see, okay, we get somewhere. Well, actually, make this a bit bigger to make it a bit more accurate. Okay, so that is 3.14%. Spot volume went down by 3.14%, the delta. And then we do the exact same thing over on total volume. And that is going to give us minus 12%. That is a pretty big difference. So we know that out of all of the volume, spot went down 3%. Total volume went down 12%. So where is the other percentage coming from? That is leverage. We know that the other sells were coming from leverage. That can either be from longs getting liquidated or from shorts being opened. Oh, you have internet issues. That sucks. Yeah, it is recorded, so you can watch it back later. That's no problem. So now we know two things. Well, one main thing. The main thing we know is leverage sold pretty heavily. The difference is pretty big, so leverage sold pretty heavily. So we already know that this push is likely gonna get at least a partial pullback. Because leverage is heavily selling, spot is not. So that means traders are selling, but the actual investors do not care. So now we want to know, okay, where is the rest of the liquidity? So for example, if, what's it called? Wow, I'm so clueless on TradingView if I don't have my favorites. So let's say people opened a bunch of longs, right? And they all had their stop losses right over there. They all got liquidated. What does that tell us? That tells us a lot of liquidity is now out of the market into either exchanges' hands or like other people's hands, shorters, whatever. That tells us, okay, we can get a little pullback, but it doesn't give us a general direction as to it has to go up now. Because, well, the liquidity is already taken. We have taken the liquidity, it's just in other people's hands now in the form of USDT. So they are just more likely to spend it than they are to not spend it. Slightly makes sense, but it is not a heavy bias, right? Now, if we know that this selling comes from shorts, well, those people, if they, for example, took shorts like that, they're going to take profit eventually. Like if you took a short like that, you're now up like 2.5R. Or if you use percentage systems, you're down, that's 5%. That's a pretty good place to be. If it is shorts being opened, we know they will eventually take profit. That is going to pull the market back up. Because if you open a short, you sell. So if you take profit on a short, you buy. So if a push is leverage led and it is being led by shorts being opened, then it is very likely to eventually get reversed at like a strong support, for example. How do we find that out? Because we already know it was a leverage led push. We already know that most of the selling came from leverage. How do we know which one it is? It's gonna... just gonna remove this real quick for clarity. We look at open interest. That is what we use open interest for. So we know that if positions are being opened, then open interest will go up. If positions are being closed, then positions will go down. Or open interest will go down. So what do we see? We see open interest going up. So what does this mean? Little question in chat. What does this mean? With all of the data that we just had, what did people do in this little area? I like the questions because it gives me time to drink. Leverage took profit. So open interest is going up, right? If open interest goes up, does that mean we get more or less positions? Like, are people adding more leverage positions or are they removing the leverage positions? No, more. Open interest stands for the amount of contracts being opened. So the more contracts being opened, the higher open interest will get. So in this case, we know that people opened shorts. Because open interest went up a lot, while leverage was selling. We know that because of the difference, right? We knew spot sold 3%, leverage sold 12%. We know leverage is selling, and because open interest is going up, we know that it is people opening new positions. So that has to be shorts. Now, after such a massive push down, right? After you, let's say you are in this position, and you go down 5%. What do you do? So right over here on this exact blue line, this one, what do you do? Because I would take profit. Yeah, you get out. Either partially or fully. That depends on the person, right? You will take at least some profit, maybe move your stop loss to entry, maybe fully close. No one knows. That is what we see right over here. This is leverage taking profit. This is one of the reasons why after a massive push down, you will always get that initial retracement because people will simply take profit. So this initial push is just people taking profit. And we can see that because open interest is going down. We know people opened a lot of shorts over here. We know that because of the open interest and because of the difference in spot volume and total volume. So they opened it over here and they started taking profit over here. A lot of people will get baited by this. This naturally is not a reason for you to long, even though the candles are green, because this doesn't tell you that we're going to go higher. What it does tell you is that we now likely have a lot of shorts over in this area. A lot of people just place their stop loss above the wick, right? So above this wick. Or maybe slightly higher, like above those wicks, right? Or at entry. So we now have a few levels where people can potentially place their stop losses. Entry, wick number 1, and wick number 2. Wait, I should actually, I'm just going to use lines for this, actually. It's a bit better. Oh, that is not the right button. Wick number 1 and wick number 2. So we know, like, we get a lot of information just because we know this moves were being led by shorts being opened. Because now we know if we go up, we will likely target these new shorts. So we will likely, if we start going up, we will likely at least take out the break-evens, or at least take out this wick, or the next one, right? Because we know a lot of people have opened shorts here, we can simply assume that they have their stop loss somewhere over here. They could very well have it over here as well, right? Also very possible. I just take the nearest levels for that. So when we start pushing up, we can assume that we target these wicks. So that is why after such a push down, the safest entry will not be in the initial push. Because the initial push is either going to be people taking profit or, for example, leverage shorts being liquidated out, right? Because this candle, something like this, is just purely liquidity getting ran through. As well, open interest is going down as well. It's because this is just these shorts that got opened over there are just getting ran through over here. So your best entry will almost always be after that. For example, a higher low somewhere in this area. In general, what we can tell by this is if moves are being led by leverage, it is more likely to get reversed. If moves are being led by spot, so if spot is selling a lot, for example, there's not a big chance it gets reversed. So if you want to see if a move is real, like if a push up is actually real, you can look at this and you can say, okay, is spot actually buying? So let's do that, right? Let's go to our current move and let's see, okay, is spot actually buying? Overall, I'm gonna put this on a daily time frame because we care about the higher time frames right now, right? Overall, spot has been selling slightly. For that reason, we can assume that we get a little pullback. How do we know spot has been selling? Because this line is going down. This line going down means spot overall has been selling over the past few days. Now, this might not matter on the individual moves, right? So for example, we go on the lower time frame. We can see that, hey, spot has actually been buying along with leverage quite a bit. So over here, for example, spot went up, leverage also went up. We know that overall spot is kind of buying, which is why this push is lasting. But spot has been selling more on average. Do note this is also slightly affected by the exchange you're on. So this is a Binance map, right? It will take data from other exchanges as well, but it can slightly differ sometimes. So in general, when we see something like this, we can say, okay, so spot is going down, spot is selling, leverage is going up. So it is very possible to get a pullback first before we get that other leg up. Where do we pull back? This doesn't tell you that. This data doesn't tell you where moves go. They tell you they give you a confluence as to what a move will be. So when you see something like this, we can expect, hey, maybe we get a little pullback. Right as I go, I don't know, just draw a fib. Either of these levels, either 382, a 0.5, or 618, I think those are very reasonable levels. In general, a pullback is to be expected. That's what we can also see, right? This entire move was just getting bought by spot, and then the moment we put in that second high right over here, spot just started selling, like relentlessly. And that is a very good and a very bad thing. It is a very bad thing because, well, that is, I mean, it makes sense why we're going down, right? But it is also a good thing because these people will eventually have to get back into the market. Everyone that sold will eventually want to get back in. So you should absolutely take it with a grain of salt. But in general, things like these can tell you, hey, I think we're going to get a little pullback. Now, something you can see, for example, if we do end up taking out the highs on our left, like the macro highs, right? Let's go back on the daily. Like these highs, for example. If we start taking these out, you will likely see open interest. So this one dropping a lot because there are a lot of shorts open in this area. So if we see that happening and spot is not buying along with it, then there's a good chance that the moves get reversed. If we see this getting liquidated and we see spot actually buying, actually turning green and the spot volume going up, there's a good chance that that is the actual push to all-time high. That is what I personally use the volume data for. I use it to spot real or fake moves. I use it to try and spot liquidity. These are the main reasons. So, are there any questions about that? No, okay, that is good. Okay, let's see. That was most of what I wanted to go over. Like that is the topic because I am someone I use this. I use open interest data and aggregated volume a lot. But I don't trade it mainly, right? You can trade off of volume data alone. If you use the other things as well, right? Things like liquidation levels, things like order levels, etc. I don't actually use that. You need like most people to do that, do it on like Excel charts or on different charting software. I just trade harmonics. I don't do that. But this, like the baseline of it, because these are essentially fundamentals of order flow, right? This is the baseline of order flow. This is very useful. That's what I use it for. Okay, now that was the main thing I wanted to go over. So I'm gonna put my screen share back to trading view. Let's see. And then we have some time to go over a few tickers. I've been looking at meme coins a lot lately. You might have seen it in my calls today. I am mainly looking at meme coins currently because they are just easier to trade. I've given in. Like genuinely, if everyone is trading meme coins anyway, why am I not doing the same? Because that is your goal, right? You're trying to beat the market. So if the market is in meme coins, I'm going to be in meme coins as well. Loki's doing well finally. Okay. So, what tickers is everyone looking at, or what tickers do you want me to look at? Start going over that. And is screen share working? TIA injective render. We can go over injective again. I charted injective so many times nowadays. Hey, where's the chart? They do it on this one. Where is the chart? Okay, well the chart for injective is gone that we charted last time. That is sad. I'm. What is that ticker? Okay, I'll look at that one first. What is that? Oh my, that volume. Okay, I'm gonna tell you one thing beforehand. You probably suggested this because I talked about meme coins. When you see this, like these gaps and these very large wicks compared to the bodies, and there's just gaps everywhere, and it just moves kind of weird. This means that this coin is not getting traded that much because I'm on a 6-hour time frame. I shouldn't have that. If I go on a 15-minute, like this is just pure barcoding. So this is not a coin I would trade. You can hold it if you want to hold it. But for trading, like, that's bad. It is getting picked up more though. Like the volume is getting better. I mean, you can actually see the difference, right? That's pretty crazy. Is this the oldest chart? No, it's not. Okay. CoinX then? Yeah. Okay. Okay. Let's see. That is a very nice 0.5 bounce, so that means we're going to look for the 886. If you have an X to B, 0.5, and then an A to C between the 0.382 and the 0.88, you're going to instantly be looking at the 886. So I'm just going to draw the PRZ manually, because that's how I spot plays nowadays. Going to draw X over 8 and B over 8 and put our B over 8 line over C and then B over C. And then what we can see is we can get a really nice visualization of the harmonic. So right over here, this is our bat. Where's the 7 and 6? Okay, the Leo didn't react, that's why. Right over here, we have a little cluster as well. You can see that because there's 3 of them together. It's not a bat, but it does kind of belong to it. It's going to put these right over there. It's a bat. So, you have a really nice range, and we're kind of bouncing off of it right now. So, if you like to hold this coin, I don't know what it is. I assume it's an AVAX meme. Okay. Yeah, no. If you want AVAX memes, this chart looks pretty good. I'm not one to use trend lines, right? But you can draw a million trend lines on this. You can draw it like this. You can draw it like this. You can draw it like this even. You can draw a lot of trend lines on this. So depending on how you draw it, this will eventually break out. In general, I think this is a really good support level. Let's see. Yeah, RSI is reflecting it as well. You can see it. So over time, even though price has been going sideways, the buyer strength has been going up. So this is a pretty good sign for the coin itself. In general, I think you can buy. If you want to get into this coin, I think you can buy like this region. And if we start closing candles consistently, like not one candle, but like 2 candles. So for example, 2 daily close or 3. Below that little box, that's where I would exit. Your TP1 is going to be this. I would take a rather heavy TP here for the simple reason that there's a good chance that this just keeps on ranging, right? Just going to keep on doing this until it doesn't one day. So that's going to be your main TP1. Then we have a very obvious TP right over here. You could target that. And something I like to do is I like to take a volume profile from the high to the low. Yeah, that aligns with our POC. So I'm just going to keep this TP. And let's see, as for the actual harmonic TPs. We have a TP very close to that 382. I'll take that 382 as well, and then the 618. And those are going to be all of our TPs. So our 382 and our 618 right over there. So I think something like this. Let's look at the percentages. So if you were to do the spot, that is plus 20%, plus 90. Yeah. And your stop loss would be around 14%. 14% is quite a bit. So I would size down slightly just because it's a low cap meme coin. And realistically, you're not actually going to get this stop loss, right? You're probably going to get it down here. Probably going to get a 20%. So I would size down because of that to compensate for the slightly higher risk stop loss. But in general, I think this is good. This is a really nice area to manage your risk. I mean, you just cut if it goes below here. Your TP over there. Your first TP is about 1 RR, slightly above it. And then your other TPs are way higher. So, pretty good suggestion, actually. You know what? I'm making a meme coin list anyway, so I'll just start adding these to the list. And then remove the ones that I don't like. Oh, let's see indicator. Okay. Now, as for injective, I do not know why I deleted this, because I made a full chart for it, so I'm kind of pissed. Oh, that's actually this one. Okay, I just hit it. Stupid. Not relevant right now. Oh, that's relevant. Okay, let's look at this. What I said last stream, and what I posted on Twitter as well, is if we flip this area to support, that is perfect for a long. And we have started doing that because injective on a high time frame looks fantastic. Like we initially disrespected this, right? We didn't even fully disrespect it, we just kind of laddered down on it. Then we tapped the cipher, we broke through the bat, back into the cipher, broke through the bat again, flipped the bat to support over here. So we can expect us to break through the Leo and then come back and flip to support. If this happens, that is a very good long. That is a very, very good area to long. So you would take something like this. And you would say just take it up to this as a TP. Main TP would just be the next cipher, right? Way higher. So I would just say this is your TP. In general, that is still like my plan for injective. Like I have a bunch of spot already. I'm looking to add if we start doing that on a lower time frame. Oh, this was an upbid listing, right? Because that just looks like a news week. Yeah, in general, this looks good still. I don't know if this is going to continue. It kind of depends on other factors. Like, it actually just depends on BTC. Because you can see that we are exhausting. So it's not necessarily showing a lot of strength. So alternatively, if we break down below this again and retest it, you can also take a short like that. And then just take it back to the lows. I will be looking at both of these for injective. Where would you put your stop loss? Probably below that break. I mean, right above that breaker block, right over there. The risk reward isn't great. Maybe, yeah, maybe just keep it above this point. Just keep it above the Leo. That is also fine. Let's keep it like that, and just target these lows right over here. We'll be looking at either of these. I'll send it in 2 charts as well. Yeah, it was, okay. Yeah, but in general, I'm not leaning to shorts on injective. Because injective is, like, this is honestly one of my favorite coins to hold and trade. Because I think this coin is going to do really, really well. Like, in a high time frame, we are still at support, essentially. Like, we're shorting the top of support, which is on a low time frame resistance, right? But it is still support. Like, if I was not in the spot position right now, I would probably buy a small amount here and either add when we get back into the bat or add if we flip this back to support. Because I think this coin is going to go a lot higher. Injective in general, my main target for injective is an ABCD, but it also just kind of aligns with a shark. I just show the shark, That is a cipher tool. I mean, cipher with the XBCD tool. Is the shark. In general, I think we can, like for spot, I'm targeting this at least. I'm targeting 60 again. For leverage, I will look to either short it back down to the range over here or long it if we flip it back to support. As for Tia, I'm gonna I'll show Tia, but Tia is like, I chart this coin a lot. I use this as an example of why you should take Fibonacci confluences one by one because it gets too chaotic. As for Tia, I don't know, this coin just looks fantastic still. This is still one of my favorite charts. I still have the full Tia chart over here. This coin is just gonna go higher. I'm just gonna know on a high time frame, this is one of my favorite coins. I still think this is gonna go way higher. So let's go on a lower time frame. I'm gonna mark the little boxes, gonna enable those. Yeah, okay, that's way below us. You can draw a trend line for those that like it. You can draw it like this on the wicks, makes it invalid because it's only 2 touches. Or you can draw it wick to close. That's what I prefer as well. We seem to be breaking out slowly. In general, let's see. This kind of looks like a bat. Yeah, we slightly missed the bat. So the bat's all the way up here. So we can try and target that. But that's why I would start looking for shorts, most likely. If I draw this one out. Yeah, so this is going to be a pretty good resistance area coming up. I don't think we get through there in one try. So I think that level is probably going to be good for shorts. It is kind of risky to short this coin for one simple reason. Funding is pretty negative. There are a lot of shorts open on this coin. Like, everyone is shorting this coin. Like, funding is like minus 0.4 or something on Binance, which is ridiculous. So there's a lot of shorts open. So I would not want to take a short with stops on a wick, because that is where everyone's shorts are. So there are a lot of shorts open, so there's a good chance you just get ran through. That is also the reason why I haven't been actively trading TIA, is because you cannot short it. So if I'm going to actively trade it, I'm literally owning on a long and long and long. And I don't like doing that for coins I actively trade. So do I think we reject here? Yeah, I think it's more likely than getting through it in one go. Will I short it? No, because I think there's a really good chance you just get stopped out. So I wouldn't do that. So, alternatively, what we could look at is if we start flipping this to support, that's when we can start looking for longs. I would not short this coin. I am not someone who only longs, right? I open up a lot of shorts as well, but it's just not a coin I would short, just for funding. You would target these highs over here. This is gonna look really weird in the screenshots. Having this level, having a bearish bat and just not charting the short. Yeah, I don't think you were there for the last stream, right? Okay, so for those who were there for the last stream, this is gonna be a repeat. But someone asked why, how I view token unlocks, especially for TIA, right? So the reason why I'm ignoring the unlock entirely is for this one simple reason. And this is for most fundamental news. If fundamental news is known to the people, I will ignore it. And the reason for that is, let's say you are right over here. And TIA looks really good, but then you find out, hey, we have a very big token unlock coming up. Like, we have nearly the full token supply coming up. I am in a lot of profit, and a lot of tokens are being unlocked. What do? Well, you sell, partially. You probably don't sell everything, right? Because all pair sentiment is still incredibly good for TIA. So you probably don't sell everything. but you sell a bit. So that's what we see over here. People are selling. So the people who had TIA, the people who like TIA, sold over here because of the unlock. Then sentiment starts dropping, and people are like, "Hey, I'm still in profit, and we have the token unlock coming up. I'm just gonna sell the rest because this also looks like a better structure. I'm just gonna get out." And that is what you see over here. This is people selling partially because of the market, partially because of the token unlock. Now, a big reason as to why people are selling is because of the unlock. So what happens to those people? The people who made a profit off of TIA, who still like the token, right? Who can see that TIA is just putting in like 30% on the day sometime. And they are not in TIA anymore because of the unlock. So what happens if we get that unlock? And either price starts kind of dumping and getting into discount, or nothing happens. They're gonna buy because they can either buy at a discount, and they are out of the market, right? They sold over in this area. They are out of the market right over here, and they can get it on a discount. Because at here they sold over here between like $10 and $18. They can get it for $5 now. Or if it goes equal, they can get it for $6, and they're gonna be like, what? The token unlock isn't doing anything. Now, do I think it will cause an initial dump just off of people getting tokens and then selling them? Yeah, absolutely. I think that can happen. I think we can get a little push down. So for leverage, I would watch your stop losses. Do I think it is going to matter for spot? Absolutely not. Because I think this dump is going to get bought up really, really hard. Because the people that sold over here are just going to buy it back. Because they sold due to the unlock. Unlock is gone. They're still out of the market. They want to get back in. And they can now get the same coin 4 times cheaper. So that's why I don't look at unlocks or general fundamental news. Because I think when people know about the news, they will act accordingly already. If you know that a war is coming, you will take profit on your longs. You will already sell partials. You will sell some spot. You will buy some gold. Like those kind of things, right? So that's why I don't look at fundamental news that often. I try and take it into account if it is not public news. Apart from that, I just don't look at it. That is partially the efficient market theorem, by the way. That is very close to it. I really, really like that theory, so I use it a lot in trading. So in general, yeah, it's good that you bring it up, the token unlock, for sure. I think we can get an initial dump. So let's say we are up here. On that chart, on the thing we just charted, right? Let's say we are up there, and tokens are being unlocked tomorrow. You probably don't take it. If we are up here and the tokens are being unlocked tomorrow, just don't take it because there's a good chance that people are just gonna sell their initial drop tokens and then get bought back up. So you're better off just buying somewhere a bit lower. But apart from that, I think it doesn't matter for anyone holding spot. Now render, that is a good suggestion. Oh yeah, render front ran out. Really hard. That sucks. Unlucky, okay. Yeah, we canceled these bits after they front ran. Still sad to see. So let's see, can we get another push down? I think render in general looks pretty good. So the first reason why I was looking for longs on this coin in the first place is just taking this. It's just uptrending market structure, right? I think this coin looks good. I think AI looks good in general. This is just an uptrend. On a very high time frame, good as well. Just bounce off the guard, you would probably have it for that 382. So in general, I would look for longs. For spot, I'd say this is not too bad of an area to buy. I would rather buy down here somewhere. But in general, not too bad. If we get it, if we ever get it, because at that point the market's probably going to be down a lot again, right? So people are going to have a hard time buying. If we ever get it, I think this guard area is a really hard buy. I think if we ever get this, if we ever get like 440 or something on render, I think you just buy. I think this is a really good level. and you just cut if we actually lose this box. Apart from that, this bat/Leo is still active, so we can still look for these levels. Let's see if he formed anything new. Yeah, we formed a new butterfly right on at 1272. So absolutely, I think this play is still valid. I would actually look at the same play again, honestly. I would look at either of these or both of them. Say is the last one. We already have a call active on Say. I'm not sure if we get it. We very well could. I am looking at this cipher on Say, the cipher to shark into this order block. Let's see. Yeah, we you can try and look for scalp shorts right over here onto monthly open. This level right over here is a very good level. You can already see it as how many times it has been used before. In general, I'm not too interested in scalp shorting this. I mean, this call is still active, right? I'm waiting for this to fail to semi-alerts off, etc. I think this looks really good in Say this area. If this fails somehow, I don't think it fails at all. I really don't. If it does, I am looking lower. There is a that is not a valid placement. I think it is off of this wick, yeah. There's a Leo right over here on the 786. And a bat on that 886 right over here. So essentially this, I'll just mark it as a box. This entire area, this is where I'm going to recompound my spot if we get it. If we ever get this box, I'm going to buy really heavily. Because we bought like somewhere down here, right? We sold at a 2x, like partials. I'm just going to mark this as a buy box. This area really good. If we ever get this, I think this is an instant buy. Because Say performs really well. I think people are finally starting to see just how good of a token Say is going to be. Because this token can run really hard. So this short actually is not like active right now for the simple reason this is a 5-0 short. And we haven't completed a 5-0 yet. So the short only becomes active when we tap that cipher. If you want to get into scalp shorts, I would look at something like this. Something along these lines. You just take the quarterly or monthly open like that. And then you would look for a reaction. If we react well, you can short it and you would take it up to that previous week mid as a 1RR. I do not recommend this one. I do not recommend it short. I do recommend this long. That's one of my calls, right? Yeah. I do not usually talk about informal harmonics all that much. For the reason that they're just complicated, right? Like, for example, there is a white swan here. Right over here. But informal harmonics, some of them are pretty complicated. So this one, for example. Well, this one doesn't make sense if you only trade formal harmonics. This doesn't make any sense, right? But we did bounce off of a white swan over here. This 886 after this extreme movement. That is a white swan. Leos are an exception. Leos are really easy. It is a 0.5. It's literally a bat with an X to B 0.5. And then an X to D 786. That is it. That is an entire Leo. So they are really simple. And that is why I talk about them a lot. Because it's actually just the same thing. As I think, no, ETH had it actually. If I go on the ETH chart, I'll hide this. Do I have the Leo marks already? I don't. So if I go on the ETH chart, just go on a weekly. We had a Leo as well. So we take that 0.5, right? This is the same as a bat. We are actually drawing a bat, but instead of the 886, right over there, We take it up to the 786. There's the only difference. If I draw out the fibs, same way I would do with a bat, right over there, you can also see that we get two little PRZs. You can see that we get a kind of big resistance band right over here, where they're kind of clustered together, right, but a bit spread out. And then a very tight resistance band right over here, or support band, I guess. This is your Leo. And this is your bat. It is that simple. I don't have any source material on Informal Harmonics because it is super spread out. I am making it though, because I'm gonna evolve it into my course as well. For the last part of it. So I am making like the full cheat sheets for it. But I have to make it myself since the what's it called? Since the information is super scattered. And the actual cheat sheets you find online are really bad. Like, for example, the one I found on Swan is just completely incorrect. Yeah, for sure. It is for sure worth it. The Leo is a very obvious one because, well, you notice it yourself as well, right? If you trade a lot of harmonics, you will notice that bats just react off of the 786 sometimes. Like, you will get front ran by the 786 a lot. That is a Leo. One thing I also noticed is that whenever I drew sharks off of the 0.5, so let's say I have a shark like this, I noticed that the 0.618 used to front run me. That is an anti-crab. That is also a thing. These exist. Finding them is a bit harder. The source material is really scattered around. That is one of the reasons why I draw my harmonics manually, right? So I can spot all of them. That makes it a lot easier. If I go into my BTC chart, for example, I'm going to go into the other one. A bit more clear. If I go into this one, for example, you can easily verify if harmonics work or not. So this is the white swan right over here. This is the M structure I'm looking at. By just enabling all of the fibs. And then you will see, hey, there are so many fibs over in this little spot. If we tap that and close above it, that is a really good sign. And the same over here, there's like a very nice support band right over there. So that's a pretty good support. And the same over here. So you can find more harmonics than there actually are. And a lot of the ones that very commonly form are actually just informal patterns. But yeah, especially because I don't talk about informal patterns that often because they are a bit... I wouldn't necessarily say experimental, but some of them are. I think swans are fantastic, for example. But an anti-crab, for example, is a bit experimental. But Leos, fantastic, honestly. Nenstar's as well. I will... I actually have... A Nenstar is just a shark at a 1272. That's the same thing. I'll put the Nenstar on the... in chat. See, I actually just lost the server by tapping out. That's funny. That is an N-star. I can make one for a bat as well. I mean, for a Leo. But for the Leo, it's really not needed. For a Leo, it's actually just a 0.5 bat. 0.5 is important. And a 786 is important. Apart from that, I will share the cheat sheet once I have it. I'm gonna remove this. Otherwise, this we're not in it anymore. But I will share the full cheat sheet once I have it. But I have to make it manually because it's so scattered around. Okay. Are there any more questions? Otherwise, I'm gonna go ahead and end the stream here. We had a pretty useful stream actually, since we had a nice topic. I'm gonna try and see if I can get another topic for next week. I was gonna do it on portfolio management and leverage trading, Because first of all, I get a lot of questions as to how I trade like 200x leverage and those kind of things. Even though it's just a risk reward setup, I thought a lot of people did it, but apparently not. So I'm gonna go over that next stream. I'm gonna go over portfolio management, risk management, etc. And then just if we have time in the general market, I don't think we do. But that is gonna be it for me today. I am so sorry for the guy who just joined. Just joined the moment of ending it. Okay. Well, I'm gonna go off, guys. I'll see you guys later. See you guys next week. And if you have any questions later, just ask me in chat or watch the recording. Recording is gonna be up somewhere tonight, and I'll put it in my channel once it's up.